Hello guys, welcome to the channel. We're going to show you wolf wave. Yeah, let's go. You want to make 1,000 pips? It's very easy. The wolf wave is a very powerful formation, and we're going to use it together with momentum and RSI. We are going to be using three indicators. The first one is the RSI, that is the relative strength index. The second one is the momentum, and the third one is the 5 SMA, that is a 5-period simple moving average. They are already on your MT4. Just go to your MT4, upload your momentum. You see the momentum and the RSI, they are oscillators. Then you go to your trend indicator. Here we have your moving average. Upload your moving average. Change the method to simple and the period to 5. Now you have your 5 SMA. But you can abandon your strategy and start trading just this pattern. It's so profitable and easy. The idea behind this pattern is that the market always moves in a series of waves. So after trading within a channel during 4 weeks, the price makes a breakout, leave the channel. The price will leave the channel, creating a fifth wave. This way we bring in our selectors and trend indicators. We bring in our RSI, our momentum, and our 5 SMA. The RSI, the momentum are for divergence, and the 5 SMA is for precise entry. Remember what I said about identifying a wolf wave? That wave 3 must be lower than wave 1, and the fifth wave breaking below the trend line of the channel created by wave 1 and 3. Wave 3 must be wave 1, and wave 4 must be lower than wave 2. And the fifth wave breaking below the trend line on the channel created by wave 1 and 3. And for the sell side, same principles applies. Wave 3 higher than wave 1 and 4 higher than wave 2. And the fifth wave breaking above the channel or the trend line created by wave 1 and 3. So you see that the bearish wolf wave pattern generates a sell signal near the terminal point of wave 5 after the 1 and 3 trend line has been breached to the upside. So the price is expected to move lower and find resistance here. So you see that the bearish wolf wave pattern generates a sell signal near the terminal point of wave 5 after the 1 and 3 trend line has been breached to the upside. So the price is expected to move lower and find resistance here. Now you don't just execute your trade using this pattern, no. Your first confirmation is the wolf wave. For you to bank in more pips and make thousands of pips, you bring in your divergence. This way you are going to bring in your RSI, your momentum, and simple moving average. Now a lot of people uses this the wrong way and misses the entire purpose of this powerful combination. Now you don't just execute trade using this pattern. Your first confirmation is the wolf wave formation, and once the wolf wave has been confirmed, you bring in your oscillators and your trend indicators, the momentum, the RSI, and the simple moving average. Now pay attention to this part, because you are going to give money to the bank. The weight rate is massive because we only the power of divergence. Look at the picture. Divergence in charts. You see, divergence is when the price of an asset is moving in the opposite direction of a technical indicator such as an oscillator or a trend indicator. In this case, you are having the RSI. Divergence is when the price of an asset is moving in the opposite direction of a technical indicator such as an oscillator or a trend indicator. And in this case, we are having the RSI. Here the market is making a lower low, but the RSI is making a higher low. The market makes a lower low, the RSI makes a higher low. Divergence are so reliable, the ones that the current price trend is weakening. That's what they tell you, that the current price trend is weakening, the trend is weakening. Then you see that the market is going up. Divergence is telling you that yes, the market is going to come down. Divergence is here telling you that, look at me, the chart is lying. The price and indicators are telling the trader a different story. Divergence is telling the trader a different story. So use divergence to assess the underlying momentum of the price of an asset. If the price is making new highs, but the RSI is making lower highs, it shows the price is weakening. As you can see in this picture, here we're using the RSI. The RSI and momentum are used for additional confirmation. They work the same way. If the momentum is so tight you don't have a signal, as in this case, it somewhat look like a double bottom. No, it needs to be pronounced. It needs to be pronounced. We use it as additional confirmation. Now let's go to the strategy. After spotting your wave 1, wave 2, wave 3, wave 4, and wave 5 in perfect symmetry, and once the trend line connected with 1 and 3 is broken, as you can see here, don't just enter the market. Wait. In this case, you see that the fifth wave has touched. It didn't break it. If it touched it, it's valid. If it broke it, it's still valid. Now you bring in your RSI. When you bring in your RSI, your focus here is on the wave 3 and wave 5. That is where you spot the divergence. And with 5, that is where you spot your divergence. Your focus here is on with 3 and 5. With 3 and 5, that is where you spot your divergence. And with 3 and with 5. And as you can see on this example, you see that the RSI is making a higher high, but the market is making a lower low. You can see that with 3 and with 5. The with 3 and the with 5 gives a divergence. Another thing to consider is that it should be pronounced. Let the divergence be pronounced. It must not be too tight. If the momentum and the RSI gives a divergence, then it's bad. It must be pronounced. It shouldn't be too tight. Resembling a double bottom or a top. Let the RSI divergence be pronounced as you have in this example. And see here, this is what you need. With 3 and 5. Let's go to another example on the Euro USD. This is 1 hour chart on the Euro USD. With 1, with 2, with 3, with 4, and with 5. The market has touched the trend line connecting with 1 and 3. Now, with 3 and 5, that is where you spotted the divergence. You spotted the divergence with 3 and with 5. That is where you spotted that. Now let's talk about our entry. And also we discussed on the other currency pairs. Like you've seen here too, the market is making a lower low, or the RSI is making a higher high. You can see that on the wave 3 and the wave 5 is divergence. The market is making a lower low, but the RSI is making a higher high. And it's very pronounced here. That's what you need. Spot your wave 3 and wave 5. And try to get a divergence on that part with 3 and with 5. Now, how do you enter this market? As you can see on the other example of the GBP USD, the same thing happens. You wait for the market to close inside the 5 SMA. That is where you have your entry point, precise entry point. By trying to use this, you don't have a fake breakout. The market will never deceive you. Using the 5 SMA as a precise entry. And in the case of the Euro USD, when you spot the divergence on 1 hour or using the 1 hour wolf wave, once the market has broken the channel connecting with 3 and with 1 or with 1 and 3, don't use the 1 hour chart to enter the market. You go to 4 hour chart and wait for the market to close inside the 5 SMA. In the case of the 4 hour chart, you are waiting for the market to close inside the 5 SMA. In the case of 4 hour, you are using 4 hour wolf wave and the RSI divergence. You wait for the market to close inside the 5 SMA. But if you are using 1 hour, if you are using 1 hour divergence or the 1 hour wolf wave that sets the market, you are using the 1 hour chart. You spot your wolf wave on 1 hour and you spot the divergence on 1 hour. After that, you come to the 4 hour chart and you use the 4 hour chart to enter the market. You wait for the market to close inside the 5 SMA of 4 hour. In this way, you'll be able to avoid takeouts. So this strategy is very simple. It's very simple. It's very simple. Like we said before, spot your wolf wave. This example, the GBP USD, you can see that the market is making, the market is making a lower low, but the RSI is making a higher high. After which, you wait for your simple moving average to close, price to close inside the simple moving average. And once you have gotten this on your wave 3 and wave 5, you just upload your 5 SMA and wait for the price to close inside the 5 SMA like you've seen here. That spot, that particular point is the entry point. Once the price close inside the 5 SMA, you pull your trigger. Bank your pips all the way up. I repeat, the trend line on the channel connected with 1 and 3, once the price touch it, once the 5th wave have touched it, or once the 5th wave have broken above it, below it, once the 5th wave has broken below it, you bring in your RSI. At this point, you've spotted your divergence on the RSI, and the momentum also gives us a divergence. We spot the divergence of the RSI and the momentum. The wolf wave is in place. You bring in your simple moving average, the 5 SMA. And once you bring in your 5 SMA, you wait for the market to close inside the 5 SMA. That is when you have your entry. At this particular point, you can buy the market from this point and make more pips. This strategy is very simple and easy to trade. We try to make it simple for you. So guys, let me know your thoughts. Let me know your comments. If you want to trade this pattern live, you can do so. Let me know your comments. Tell us if you want us to make more. If you want us to make more videos like this, please notify us. If you already started trading live, please notify us. If you want to trade this pattern, please notify us. If you are confused about some topics, please comment at the comment section below so that we can know what topics to cover. Please subscribe. Remember to subscribe because we are going to make more videos, powerful content. Our aim here is to make difficult concepts very simple, to give you profitable strategies you can use to assess the market, to trade the forex market. If you are confused as to how to go about your trading, please comment below. And there are more videos to come that are going to give you strategies that suit you, that you can use to assess the market, to trade the forex market.